Imagine a world where a single company's worth eclipses the GDP of entire countries. That's the jaw-dropping reality we're staring at today, as Microsoft surges past the $4 trillion valuation mark once more, entering an exclusive league alongside AI powerhouse Nvidia, with a brief cameo from Apple earlier this week. It's not just numbers on a screen. It's a testament to the wild investor excitement swirling around artificial intelligence. But here's where it gets controversial. Is this AI frenzy sustainable, or are we witnessing a speculative bubble that could pop at any moment? Stick around, because there's more intrigue unfolding that might just challenge how you view tech giants and innovation. Diving deeper, let's break this down for those new to the stock market scene. A company's valuation, or market capitalization, is essentially the total worth of its outstanding shares multiplied by the share price. When it hits $4 trillion, that's like saying investors believe the company is worth 4 million of dollars, enough to buy a lot of Lamborghinis or fund global charities. For beginners, think of it as the collective bet from millions of people on a company's future success, driven by hype, earnings, and potential. On this historic day, October 28, 2025, Microsoft Corporation achieved this milestone again, aligning with Nvidia, the leading producer of chips essential for powering AI applications like advanced robotics and deep learning algorithms. Apple had briefly joined them on Tuesday, showcasing how quickly fortunes can shift in the tech world. This surge underscores the feverish buzz around AI technologies, which promise to revolutionize industries from healthcare to transportation. Imagine self-driving cars that learn from real-time data, or medical diagnostics that predict diseases before symptoms appear. But here's the part most people miss. The catalyst behind Microsoft's boost wasn't just internal growth. Earlier that same day, OpenAI, the creators of groundbreaking tools like ChatGPT, announced a major shakeup in their structure. They transformed into a public benefit corporation, a unique setup that blends for-profit goals with a commitment to societal good, such as ensuring AI benefits humanity ethically and equitably. The move received approval from key regulators in Delaware and California, who dropped any objections, paving the way for this evolution. To explain this simply, a public benefit corporation differs from a standard company by prioritizing positive impacts alongside profits. For instance, while a regular corporation might focus solely on maximizing shareholder returns, this model requires balancing that with broader objectives, like advancing AI safety. And in a twist that could spark debate, OpenAI inked a fresh partnership with its long-term supporter, Microsoft, granting the software titan approximately 27% ownership in OpenAI's newly formed for-profit entity. Critics might argue this tightens Microsoft's grip on AI innovation, potentially stifling competition. Do you see this as a smart collaboration or a monopoly in the making? This news sent Microsoft stock soaring, closing up 2% at $542.07, pushing the company's total value to $4.04 trillion. It's worth noting that Microsoft had previously crossed the $4 trillion threshold in July, becoming the second company ever to do so, right after Nvidia. Meanwhile, Apple's shares had dipped just shy of that mark by day's end, settling at $269 for a valuation of $3.99 trillion. Yet, the tech icon holds a storied history as the pioneer in these lofty valuations. Powered by the iconic iPhone's global appeal, think of how it revolutionized personal communication and entertainment. Apple was the first publicly traded company to reach $1 trillion, then $2 trillion, and eventually $3 trillion in market value. This journey highlights how a single product can drive exponential growth, but it also raises questions. In an AI-dominated future, will smartphones remain the king, or will they be overshadowed by smarter, more adaptive devices? In wrapping up, these milestones reflect not just financial triumphs, but the evolving landscape of technology and ethics. But here's a provocative thought. With valuations this astronomical, fueled by AI's promises, are investors betting on a bright future or chasing a mirage? Could the intense focus on AI lead to unintended consequences, like job displacements or ethical dilemmas in machine decision-making? We invite you to weigh in. Do these valuations represent true innovation, or is this a risky gamble? Share your opinions, agreements, or disagreements in the comments below. Let's discuss.